Hey guys, so I said I would do a bit of a comparison between Riot Platforms and Cleanspark, and maybe sort of towards the end have a little quick look at Marathon, just to sort of compare the big boys basically. And yeah, it's a bit might be a bit disjointed, but we'll just have a look at sort of the main comparison points that I think are worth looking at. So first thing would be hash rate and hash rate growth. Riot's sort of, I think, have the best, the best outlook here. They are at 12.4 exahash at the moment, even up to their February announcement. I don't think March is going to be any different to that, but they are sort of looking forward in the next quarter to be starting to energize their Corsicana facility. So they're saying by the end of Q2 they should be at 21.4. That includes a little bit of upgrade to the existing facilities at Rockdale, and yeah, that includes replacing, I believe, some of the sort of faulty, problematic miners, which is why they're sort of at 12 exahash but are only producing 418 Bitcoin in the last month. So they're pushing to 21.4, but their big strength at the moment is, of course, this Corsicana facility or development, in that they've already bought the land for all of this, and it's just basically, carry on building all the way to, they're saying 100 exahash, wouldn't quite go that far, but certainly sort of up to 27 by the end of the third quarter, 31.5 by the end of the fourth quarter, and then 36 and 40 by the end of next year, without any sort of additional facilities or additional purchases. So to get to 40 exahash, they are currently saying they have the cash and hopefully cash flow to do that without sort of needing to dilute. So in theory, future dilution would be basically just stock-based compensation. Now they do have a at the market dilution offering up at the moment, but they are saying that is to get them beyond 40 and towards 100. So whether that means buying another facility or if there is room just to sort of keep expanding here, then maybe that is to buy sort of more rigs to go from 40 to 100. They do have their long-term option to buy the latest generation machines with a price ceiling of 1650 per terahash. So they sort of give you this little handy chart here going back to July 2020. You can sort of see the 25 to 28 joules per terahash miners were basically following the Bitcoin price up and down. And then since sort of the beginning of 2023, it's taken a bit of a divergence as sort of, I guess, interest rates were starting to bite, and yeah, Bitcoin price was on the up, but there was, of course, a lot of development, and then you have the new higher efficiency machines coming in. So 20 to 25 joules was dropping and dropping in price, and now you have the under 20 joules per terahash miners increasing. You can see the purple at the bottom here. So that's 20, what is that, 23, 24, $25 maybe. And they have a long-term option at 1650. So yeah, that's pretty good. That's for 75 exahash worth of miners, and that is what they're saying would take them from 40.8 to 100, although that's sort of beyond the end of next year. I mean, obviously, I'm not looking to stay in anything crypto related or on a big scale beyond end of next year. But yeah, I think that gives them sort of growth plans. People are always looking forward, of course, at the stock, not just what they're doing right now. And yeah, so to compare that to Cleanspark's, looking on their investor presentation, so they have their projected path to 50. They're not quite at 12.5. This was at the sort of February investor presentation. They are now at 16. and they do have the sort of facilities and upgrades going on at the moment to get them to 20. So that sort of puts them at a similar range to where Riot will be at the end of Q2, and I think that is why they're sort of getting a lot of love at the moment. And then they have the second half of the year 32 exahash, but this I think is the thing people maybe aren't noticing, or they maybe just have noticed with the at the market offering announced on Thursday, I believe it was, after hours. So they sort of purchased the rigs and well agreed a price and everything. I'm not sure if it was they actually had the money to make those payments, and obviously that was just the rigs. They need to be buying facilities or building sort of facilities on purchased land, or they have been sort of recently buying facilities and just putting their new rigs in those. So that's presumably more expensive because it's turnkey, ready-made facilities. But yeah, so basically their path to 32 exahash is sort of was not funded. They have 48 million dollars in the bank, which won't pay for much of anything, and they have 4,200 Bitcoin on the balance sheet, which they it seems don't want to sell. They want a reasonable amount. Everyone seems to want sort of a reasonable amount going into and after the halving. So basically, they need dilution just to get to 32 exahash, and then this 50, sort of sometime next year, will need a hell of a lot more dilution. Whereas, obviously, Riot are saying that they can get to 40 without anything more. They already have the facility, they already have, or they already have the land available to build. So they're just, putting up buildings, and they have what was it? If you come down to the balance sheet side of things, $597 million in cash already without doing any more dilution. So not having to buy the land and having that sort of cash, and obviously a bit more cash flow during the year, they seem to be able to get to their target without the dilution that Cleanspark are going to need. So the other thing is cost to mine, of course, and this is where Cleanspark, again, sort of lagging a little behind. They're not too bad. They're better than sort of Marathon and some of the other cost to mine or higher cost to mine companies, but they have sort of an overall power cost for Q1 of 4.4 cents per kilowatt hour, which is pretty good, and they'll sort of turn off and curtail when needed, and they get a little bit of money back for that. But sort of being in Georgia and one in New York and one in now Mississippi, doesn't quite seem quite so much of a thing as it is in Texas. So sort of looking at Riot's, they have 2.2 cents per kilowatt hour, and this seems to be largely down to turning off and receiving sort of quite a bit of money when they do turn off. So they sort of show you down below here. They will sort of strategically switch off when it's best to. So yeah, they'll look at it and say, if we're going to get more money by switching off than we will mining, we will switch off. So that sort of sometimes makes the Bitcoin per month not quite as good as the others, but obviously, if you're literally going to receive more money by switching off, then it is better. So they know best, and that gives them the what are they saying, $7,539 per Bitcoin to mine. Obviously, that isn't sort of running their full hash rate at full capacity all year and having 7,539 per Bitcoin, but what they do mine is mined at that cost, including sort of the money they get back. So I think that's pretty good. And as they're sort of highlighting again, 2024 capex is fully funded. So the 40 exahash, if they go back on it, I guess, and sort of say, well, we do need a little bit more money, another sort of at the market offering, or they sort of it's hinted that they're using some of their current one to pay for current expansion. Maybe if Bitcoin price goes down or something, I don't know. They've obviously got some projections for cash flow from Bitcoin sales as well. Yeah, we'll have to see. So just looking at the spreadsheets, obviously these are a bit of a moving target and a bit sort of finger in the air, but I've sort of taken Riot Platforms from 31.7 exahash at the end of the year, sort of an average, and sort of next year they're obviously still expanding. So the mining amount, I've taken, the dates aren't right here, but that doesn't really matter. So if you said from January 2025, basically, I've left the mining amount the same per month on the basis that hash rate, global hash rate will continue going up and difficulty going up. Obviously, everyone is saying they're expanding next year as well. So as they push from sort of 31 exahash to 40, I've kept the mined Bitcoin the same. So after the halving, I think that's sort of a fair way to go, and that sort of gives them, at various Bitcoin prices, as they've done with the CleanSpark one, sort of different profit levels. Again, the data center hosting and sort of engineering side is a little bit finger in the air. They're looking to wind down, from what they're saying, the data center side and sort of push obviously more on Bitcoin now that we're in a bit more of a bull market. Whether sort of data center gets more profitable with more sort of AI uses, we don't really know, but at the moment it seems quite poor. Engineering, I've just sort of left roughly the same as it was, and sort of costs similarly. And power curtailment, I've sort of, it's a reasonably high number, but not too far off where they have been. So yeah, not too bad there. And depreciation, sort of similar to what they have been doing. Maybe that should go up with the expansions, but yeah, we'll have to see. So yeah, looking at gross profit, they sort of go gross profit at $80,000 per Bitcoin in the model, and then sort of general admin and stock-based compensation. And yeah, so operating profit 24 million at $80,000. Again, these probably won't be anywhere near where they actually end up. Interest expense, I've just taken a very, very small amount, thinking that they may need a little bit of debt tax. And then net profit, so they are net profitable in the model, at least at $80,000 Bitcoin, which I believe CleanSpark are not. And then balance sheet cash, I've sort of dropped this a little bit. Obviously, they're going to be presumably spending some of this cash while they're expanding, but sort of having a decent cost of production, I imagine some of the cash flow during the year will pay for that, so that's pretty good. Debt, I don't think they do have this at the moment, but I've just left that on. That was from sort of previous balance sheets, and it doesn't make a lot of difference. Just sort of being a little bit cautious. They might need a little bit of debt for something. And then, so they've got 8,067 Bitcoin at the latest operational update. So I've obviously times that by the projected Bitcoin amounts up here, and you sort of get to nearly $1 billion in Bitcoin at sort of $120,000 Bitcoin. So that's pretty good. And then, yeah, PE multiple is probably conservative if we're getting towards sort of $100,000 or $120,000 Bitcoin. But yeah, that sort of gives you a market cap nearly 4 billion, nearly 8.8 billion at 120,000. So with the shares outstanding, I've gone up a little bit to allow for stock-based compensation and some of the at the market offering, even though they do say that isn't to get them to 40 exahash, that's to go beyond 40 exahash, but obviously we'll give them a little bit of benefit of the doubt, assuming they may need to sort of use some of that for current operations, again, just to be cautious. And yeah, that sort of gives you a $15 share price at 100,000 Bitcoin and $33.82 at 120,000 Bitcoin. Obviously, it rises up parabolically pretty much once you get past sort of 100,000. You know, you could put in a 150,000 column in here, and it'll be, you know, $60 or something. And then as far as sort of less cautious approach, I suppose, you know, you can sort of look at whatever free cash flow will be if they start knocking out, or adjusted net profit, whatever they're going to start calling it, adjusted EPS. Maybe take out the depreciation, and yeah, you get to $32 just at 100,000 Bitcoin, and nearly $55 at 120. Or obviously, if they're sort of running that sort of profit, what is that net profit of 156,000 at a revenue of 600, or a net profit of 156 million at a revenue of 674 million. So that's nearly, well, 24% net profit. So maybe they deserve more than 25 PE. Say 40 for that. And so this is 293 million net profit at 809 million in revenue at 120,000 Bitcoin. So that's more like 35% net profit. So yeah, you're getting up to tech stock, you know, Bitcoin bubble times. I always sort of put 40 and 50 into these at, you know, if we're in bubble time. So that gives you $24 and $56. So yeah, these are all the sort of super bullish scenarios that you could be thinking of. And yeah, looking at CleanSparks, which I've been doing before. Again, this is from 20 exahash because the 32 exahash and 50 exahash projections are not fully funded. So I've sort of taken this from 20 exahash from the month after from next month basically, rather than Riot's end of the year. So the mining amount is sort of higher currently because it is from April 2024, and they're sort of obviously expanding a little bit at the moment, and some of the miners I'm expecting to drop off after the halving. So yeah, maybe these figures are slightly wrong, but sort of kept it steady, and then dropping it sort of 3% after September time, or after August time rather. So yeah, that gives you 5,980 Bitcoin from April onwards for the year sort of starting next month. Maybe that is a little bit high, but we'll see. It still doesn't make them look particularly rosy. That gives you sort of, I won't go through all the figures, it's similar to the way I did Riot. Obviously they have less, they don't have the data center hosting and engineering side, so it is just Bitcoin mining. And yeah, I've sort of shown this spreadsheet before. It gives you $10.85 at $100,000 Bitcoin, which is sort of, well, $8, $9 less than where they are at the moment, even with the drop on Thursday. And so to go sort of super profitable, you need, well, not super profitable, that's 27, that's sort of $8 above the current share price. You would need the $120,000 Bitcoin, which isn't ideal. So to go sort of, to make it a reasonable investment going forward, you do need to start, you know, doing things like taking depreciation off. You know, that gets you sort of just over double the share price, or, you know, we'll need sort of a 40 or 50 PE. Even at a, you know, $100,000 Bitcoin at a 40 PE is below the current share price. Maybe, you know, if you drop the Bitcoin hodl and sort of a little bit of cash off, it's a little bit better value. But yeah, sort of 50 PE on $120,000 Bitcoin is your 46. So it's not ideal, really. Yeah, and you don't get that sort of huge, fairly huge multiple, I would say, if you start sort of looking at 50 PE. at 120,000 Bitcoin. That's basically a 5x, well, not quite a 5x, but sort of 4.5x from the current price. And none of these scenarios give anything like even a 3x for CleanSpark. So overall, it is looking like Riot is potentially the better miner, and I think they're just getting sort of they're not getting the love because they've got problems with their current miners, and I think they have a little bit of litigation going on with some of the data center hosting clients because they're cancelling contracts and that sort of thing. But I think past the end of next quarter, if they do get to 21.4 exahash, potentially above CleanSpark's already there, because it looks like they're not going to get to CleanSpark, aren't going to get to their 32 anytime soon. They haven't even bought sort of land or facilities or anything. So yeah, it looks like Riot will get sort of above CleanSpark by the end of June, and then maybe people will realise. Obviously, I haven't looked at the market cap in this video, but CleanSpark are still about 30% higher market cap than Riot. So yeah, we'll have to see if people see that value over the next few months, or maybe towards the end of the year as they start, really ramping up. So it was suggested that I throw Marathon Digital Holdings into the mix. They're sort of currently, I believe, the biggest miner, public miner in the world, and they have in the February update, I'm sure we'll get a little bit more in the next couple of days, but in the February update increased their hash rate to 28.7. So it's not quite as high as I thought it was. I thought they were getting towards sort of 30 or 40, considering they are at 6.04 billion market cap. That's not particularly high. I haven't checked the sort of balance sheet side of things, whether they had any debt. So yeah, 326 million in debt, where the others don't really have any. So it's not current debt by the looks of it. Yeah, long-term debt, 325 million. So there's a little bit to pay there, and high interest rates. That's not particularly nice. So yeah, that has to be factored in. And they have, what are they saying, 16,930 Bitcoin as of the end of February. So, you're looking at $70,000, yeah, 1.185 billion, and then sort of a little bit of cash on top. What do they have? So 357 million in cash and cash equivalents, so about 1.5 billion. Obviously Riot are at just about 1 billion, so not exactly a huge amount more, considering they're around double the market cap. And yeah, obviously we know Marathon have higher cost of production because they, I believe, don't really own many of their own facilities. They're sort of they have their rigs hosted in other people's facilities, so that gives you potentially more leverage towards the Bitcoin price. If that sort of rockets up to 100, 150, or 120,000 maybe, 150 on the real bull side, then all of a sudden Marathon's price, you would think, would increase more than Riot and CleanSpark as they sort of become more profitable. But certainly if we don't get to that very quickly, or sort of, there's a bit of a dip after the halving, they're going to be quite unprofitable, I would expect. If CleanSpark were, then you would expect Marathon will be. So yeah, they're getting the love at the moment because they're doing 833 Bitcoin a month, where Riot were doing sort of 418, so literally half, and they are half the market cap. But would expect this to change quite a bit over the next couple of quarters. I gather obviously Marathon are going up as well. They sort of have a target for, I think, 50 exahash, but everyone's got a target for 50. So yeah, overall, I mean, I'm not going to do a spreadsheet on Marathon because, yeah, just from the sort of initial numbers, it just doesn't look quite as good. As I say, 28 exahash, even if they are growing. Riot are sort of looking to be at 31 by the end of the year, and sort of Marathon are already double the market cap. They sort of have a bit more Bitcoin on the balance sheet, about double the Bitcoin, but that isn't a huge amount of the market cap. And then they have 300 million in debt and around half the cash, so that sort of equals out. So as I say, they got about 50% better balance sheet position for double the market cap, and certainly not double the hash rate going forward. So yeah, it looks like Marathon are sort of slightly less good value compared to CleanSpark. I don't really know. Would have to sort of maybe do a spreadsheet. So I am considering maybe switching up some of my CleanSpark for Riot Platforms. Obviously, Riot is a very small position for me at the moment, and CleanSpark, if they can maybe come back from this after hours drop that they had, and the drop on Friday, you know, sort of 8% down just on the day, and then 12.5% down after hours. Maybe this isn't how it actually opens, or whether it is moving at the moment. I'm not sure whether we are in pre-market today, whether the market is open today, but we'll see tomorrow. And yeah, maybe I make that switch for part of the holding at least. As I say, Riot still being at sort of just over 3 billion, even though it has sort of been a little bit on the up. It was at sort of below $11 in that little mid-March drop, but at $12, you know, it was at sort of $12 sort of April last year. Maybe they were way overvalued back then, but yeah, we were at sort of $30,000 Bitcoin. Now we're at sort of 70,000 going into the bull market. It's looking like, at least anyway. Maybe with a bit of a correction for the halving. So yeah, I'm certainly weighing things up. But let me know your thoughts in the comments below. Any thoughts on sort of maybe Marathon as well, or which of the three you think is best, or maybe one of the others. And like and subscribe. See you soon.